Onto your markets news now. Asian stocks pulled back from their 2.5-year highs in today's session. Market players are said to be keeping a close eye on a number of data points coming out this week, while also keeping a close eye on geopolitical tensions, which have yet to materially affect the oil price. The Nikkei share average reversed some of its losses from yesterday, closing up 1.93%, while Hong Kong and China were out on holiday today. U.S. markets were more subdued on the last day of the trading month in September. It's thought traders decided to either take profits or pause ahead of a heavy data week, which includes U.S. PMI and jobs numbers, among others, enabling them to further ponder on the scale of the next interest rate cut. The Dow Jones Industrial Average closed more or less flat, up 0.04%. The S&P 500 ended the session up 0.42%, while the Nasdaq Composite Index rose by 1/3%. Taking a quick look at the indicators, the all share is climbing over 0.5%. It's hovering around 87,067 points. The rand is trading at 17.31 against the US dollar. We see that a little bit weaker now. 23.06 against the British pound and 19.90 vis-a-vis the euro. Gold is trading at $2,648 an ounce, while platinum is trading at $991 an ounce, and Brent crude oil has slipped. It's now trading at $70.94 a barrel. Well, to unpack the markets for us, I'm joined by Fahima Adia. She's Senior Equity Analyst at Momentum Securities. Thank you very much, Fahima, for joining us. So U.S. markets closed the month of September on a lower note. Well, not so low, but, on a subdued note after a good run and breaking all-time highs, with the local bulls also doing the same after hard runs on the equities markets. What was that all about? Just give us a sense of what trading looked like in the third quarter and why it ended a little bit subdued at the end.
Afternoon, Nonko. Thanks for having me. Yes, so it's been quite a good quarter, I would say, overall, especially for our JSE, which we've seen reach record highs. And that's obviously been driven, by the improved sentiment from the GNU and also those interest rate cuts. And then, like you said, if we look at other markets like the US, there's been a lot of volatility there over the past 3 months. But I think it did see pretty decent performance, I think. So we saw better performance in the S&P in comparison to the likes of the tech-heavy Nasdaq. But all in all, I think it was a decent 3 months for those indices, which are, a lot of them have reached record highs, on and off, a lot of volatility, but still looking quite high. And then if we look at China, I mean, there's been some very strong recovery there. Just on the back of those stimulus plans that have come through from China last week. And we are expecting some key data to come out later this week from the US on those non-farm payroll data. So I think that will definitely have an impact on markets later this week too.
So I see oil prices haven't really moved that much, and it's an issue that I raised with the analysts yesterday as well, given what's happening in the Middle East. In fact, we see that the oil prices ticked down, and that's despite Israel now deciding to launch a ground offensive in southern Lebanon. It's interesting how unresponsive the oil price has been.
Yes, exactly. It's not what you would have thought, considering all this escalations in the tension in the Middle East. And like you said, they've just now launched their on-the-ground attacks in Lebanon. But what's really been keeping that price, I think, lower and quite steady has just been the supply prospects are expected to increase from OPEC towards the end of the year. And then we also have generally weak global growth expected, particularly considering, what's happening in China and that we've seen weaker than expected recovery there. If you look at the latest PMI numbers from China, it does show that factory activity there has been subdued. But hopefully, these new stimulus measures that they've introduced last week will see some boost to that economy. But for now, I think those are the main factors that are contributing to that decline in the oil price.
You beat me to it. I wanted to talk about PMI data. We'll skip China since you've already told us that indeed they registered a lower PMI number. But the South African number was very good for the month of September, up nearly 10 points. It's above that 50 number, which sort of separates expansion and contraction, which is very positive. What are your thoughts about the prospects for the manufacturing sector?
Yes, it's great to see there's been some recovery there. Like you say, it's finally above that 50-point mark. It's of course been a very tough time, I think, for the SA manufacturing industry in general over the past few years. And it seems like, the positive sentiment from the GNU together with these interest rate cuts are having a positive impact on our manufacturing industry. Also, the stronger rand would be contributing to that. So let's just hope we can keep up that momentum there.
Indeed. Lastly, let's take a look at one stock, Capitec. They released their half-year financials for the 6 months ended August 2024. The company reported operating profit at 8.3 billion rand. That's up 41% on the year prior. Also, headline earnings per share coming in at 5,544 cents. Basically, that's up 36%. Your thoughts on this stock and how did the market react as well? What did the share price do?
Yes, so quite a solid company, Capitec. I mean, the performance on this company has been excellent year to date. Performance is up almost 54%. If we look at the performance today, it was up about 2%. So I think the stock is starting to look a bit more fully priced. It has had a really good run to date. If we just take a closer look at those results, what's been driving the solid results has been those lower credit loss ratios and also strong growth in non-lending income. Like you said, the headline earnings were up quite significantly by about 36%. And it's good to see that the dividends increased in line with that, which means they are returning that excess cash back to shareholders. What was interesting to note is what has really been a growth driver has been that Capitec Connect business, as well as net transactions and commission income. And on the digital side of the business, they've been seeing quite a lot of increase in volume. So I do think this company will probably continue to do well, especially considering the interest rate cuts and the expansion strategies that they have in mind.
Is it a buy, sell, or hold?
For me, I think it's probably a hold for now. I just think in terms of the valuation, it is looking quite fully priced for now. So maybe on a pullback, it's one we will have a look at. But for now, it is looking quite fully priced.
Super. Thank you so much, Fahima Adia. She's a senior equity analyst at Momentum Securities.